Hello, chart watchers and Decision Point faithful. Welcome to this Monday, April 4th, 2022 show of Decision Point. My name is Erin Swenlin from DecisionPoint.com, and I'm here to show you which charts you should be paying attention to moving into the week. So let's look at our agenda. It's kind of going to go fast today. Market overview and indicators. Carl was not able to be with us today, so I'm going to be doing that portion. I'm going to also do a sector overview so we can see what's happening with the sectors. Where is the leadership coming from currently? And then I'm going to finish with a diamond of the week. Not diamonds. I actually have just one that I really liked. I do a free trading room in the mornings on Monday or noon Eastern, so maybe not the morning. And within that trading room, I take symbol requests as well as looking at the market overall. And this morning, I had a symbol request of a stock that I thought looked really good. So I'm going to be presenting that particular stock. So go to our live trading room on Mondays. You can register just by going to the DecisionPoint.com homepage, and you will see a link to register for the Monday trading room. If you can't attend live, feel free to put your name on our free email list, because I do send out the recordings every evening on Mondays so that you can still listen to it if you are interested. All right. I don't believe that I have the sector chart list that I should right now. Yes, so I know we have some changes to this, so I'm just going to skip over that and we'll just get right on into the charts. All right, so I'm going to start with an overview of what's going on in the SPY and look at our major indicators that we look at all the time for our DP Alert subscribers. So we're going to cover all of those. And then, like I said, I'll get into a little bit more regarding sector rotation and strength currently within the sectors. So we're starting off here with the SPY. This is a 5-month candlestick chart. And to be perfectly honest, I've been on vacation for the last week and a half, 2 weeks. So not that I'm looking at these fresh at this point, but certainly a lot happened while I was gone. And that was a very strong rally. When I left, currently my exposure is 15%. I did want to increase my exposure after this breakout, but knowing that I was on vacation and knowing that right now, if you are buying anything, if you have any stock, any position whatsoever, we should be trading that as a short-term investment. We need to be able to look at these charts regularly. And since I knew I was going on vacation, as much as I wanted to take advantage of this rally that did continue while I was gone, I just couldn't do so, because it's important, especially now with a bear market environment, let's put it that way, that we be extra careful. So looking at this, we did get a breakout here above this level of resistance. And it was a nice move to the upside, but it was followed immediately with 2 pretty severe down days that brought us back beneath that overhead resistance. This day right here that you can see was actually, we ended up with a climax day. It was a downside initiation climax in our minds. It looks like it might have been a downside exhaustion, but given we'd only had 2 days and the last one we had right here was an upside exhaustion, we really felt that this was just a follow on. And really, I won't discount that downside exhaustion climax here, because we still haven't managed to get back above this area of resistance. It has been a nice 2 days of rally, but I'm not seeing what I want to see just yet on price. Now, when we look at the indicators, they are really still looking quite positive. We have an RSI that is positive above that net neutral 50. This tells us that price is in the upper half of its 2-week price range. So we know at this point that it's positive. It's in that upper part, and it's not above or overbought. Like you can see back over here, it's not overbought. So we know that everything is looking pretty good as far as price not being overbought or even oversold at this moment in time. When you look at the PMO, it is still rising. It is not overbought. Typically, the PMO is going to travel between -2 and +2. So when we start to see that PMO get a little bit higher, when we start to see it approach 2, then we'll start looking for that overbought condition and a possible turn to the downside. But right now, those indicators are still looking rather positive. We can see that total volume has contracted somewhat. It is below its annual average, but we still have a pretty nice amount of volume going on. The VIX, this has been a really interesting condition to me because having studied the VIX for so many years, typically when you get these Bollinger Bands starting to widen like this, it's on volatility, of course. That's what makes them stretch apart like that. But typically when you get the volatility, it's not to the upside. We don't usually see these Bollinger Bands expanding on a VIX that is rising to the, well, on my inverted scale, rising. We don't usually see the volatility increase when we're talking about moving to the upside. So this has been a really interesting condition. One of the things we watch for with the VIX, because we do invert it, are overbought and oversold conditions for the VIX. Right now, we are somewhat overbought. Yes, we're not quite to that upper Bollinger Band, but still, when you look at where it is right now, the VIX is right now, it's really a little bit on the overbought side for what we've been experiencing over the past year, well, this year. So it still looks good because we're getting lower readings, which means investors are feeling a little bit more comfortable putting money in the market, which is pretty obvious, really, when you see those aggressive areas like technology, consumer discretionary starting to do well. All right. So when I look at the 1-year chart, we do have the possibility here of a bull flag. So you get the flag pull here, and then we're starting to see that pullback. And now we're getting that breakout to the upside, almost breakout. And I'll show you why I say it's an almost breakout. All right, this is our short-term Climax chart. So I'm saying almost breakout because the declining trend that started this flag, part of the flag, is still intact. Looks like we did get a little bit outside that declining trend, but I would say that short-term declining trend is still somewhat intact right now. Now, when we go through our indicators, not all of them have updated. But I can tell you, looking at what we have right now, that we're not looking at a climax day. We didn't have elevated total volume. We have the SPY coming in, the up-down ratio, that's below our threshold of 3. So at this point, I wouldn't expect to see an upside climax on the day. Here's that downside initiation climax I was talking about earlier in the show. All right, let's look at the Swenlin trading oscillators. Okay, so as I said, not all of these are up to date. We do have what the STOs, our Swenlin trading oscillators, did for the day, but we are still waiting on some breadth numbers here to see how many stocks are still above their 20 and how many have a PMO rising. But I can make a few conclusions just with what we have right now. So first of all, I do not like the STOs continuing to decline, particularly on a day where we were up 0.86% on the SPY. I would expect to see those begin to reverse if we truly are looking at a bull flag and a possible breakout ahead. So this is a bit of a problem right now. Okay, so let's also look down here. Now, even though these aren't the actual numbers for the day, we already can see that they are sitting pretty much in neutral right now. They're not bullish because we consider 70% or higher a bullish reading. So they're not bullish. What I was telling people in the trading room right now is they're somewhat neutral right now. Neutral conditions are very frustrating because neutral doesn't tell you which direction. It just tells you, could go either way. But that tells you that you are vulnerable to a downside move. So they are in neutral, and yesterday's rally didn't really improve their readings that much. So they do remain in neutral. I would expect to see them expand after we get the new numbers, just because we did have such a strong day. If we don't get a nice strong move on these indicators, that would be another sign that weakness is still here in the short term. Looking at the ITBM and ITVM, these are our intermediate term indicators, and they are mixed right now. Again, we don't have the percent crossover buy signals just yet, but I think we can make some pretty good conclusions here. I'm going to add the Zoom thumbnail here because it's not totally obvious how they are mixed at this point. So you can see that the ITBM has been rising. It's kind of flattened out here, but technically it is still rising for the intermediate term. Now, the ITVM, which is based on volume, has flattened out, but is trending a bit lower right now. So that mixed reading, seeing those mixed readings, does give me a little bit of pause here on how we're going to see this continue to play out as far as getting more upside. And if you look down here, the percent crossover buy signals, over 70%, so that is positive. But as you can see, they have topped, and we now have the percent crossover buy signals falling below the signal line. And if you look back in time, typically when we see those crossovers to the downside, you're looking at market tops coming in. So that is one concern we do have. These indicators also would be considered overbought. And so that also leaves us vulnerable to some downside right now in the intermediate term. All right, I think we kind of covered that, but I'm going to look at bias, our bias assessment chart. And this is a chart that we do go over every day, every market day in the DecisionPoint alert. And it's the one I actually finish with when I'm talking about the SPY, because I want to give everyone a general overview as to what the bias is in the market. And currently, we'll start with the intermediate term. The intermediate term bias is determined by the SCI, our Silver Cross Index. Let me take this inspect tool off. There we go. So the Silver Cross measures how many stocks have a Silver Cross. A Silver Cross is a 20-day EMA above the 50-day EMA. And so we look at that percentage and see whether it is above 70% or not, because again, 70% or higher is bullish when you have that many in the index with their 20 above their 50. That is considered bullish. So as you can see, we do not have that 70% plus reading, but the SCI is rising. So I am looking at the short-term bias right now based on, the intermediate term bias as being neutral to somewhat bullish, because again, neutral because we don't have a 70% plus reading, and but we do have the SCI rising, which to me brings us into a more neutral position as far as the intermediate term. This is pretty much in line with those intermediate term indicators that I just showed you. Golden Cross Index, this is how we determine our long-term bias. And the Golden Cross, of course, most people are familiar, is a positive 50 to 100-day EMA crossover. So the Golden Cross Index basically measures how many stocks in the S&P 500 have a 50 above their 200. That means they have a bullish bias. That's what we've always talked about when we look at individual stocks, look at indexes. You want that 50-day EMA to be above the 200-day EMA. Currently with the SPY, that is exactly what we have. We're also seeing some margin, the margin getting larger between the 50 and 200. So that's all really good news. So the GCI, the Golden Cross Index, has given us a positive crossover and is rising, but it is not above 70%. The good news somewhat good news, is that we do have more stocks above their 50-day EMA, 62%, than we have for the Golden Cross. And again, if you have a 50-day EMA rising or price above the 50-day EMA, that means the 50 is going to start rising. The big problem is that we don't have as many stocks with their price above the 200-day EMA, because in order to get a Golden Cross, you need both price above both the 50 and 200. So at this point, I would read the long-term bias as still somewhat bearish. Yes, the Golden Cross is rising. Yes, it had a positive crossover, but we don't have the participation under the surface that will keep this GCI rising. So that's really the issue that I have right now. So what about the short-term bias? The short-term bias actually is looking bullish right now. Why is that? The Silver Cross Index, as I said, is at 54%. Right now, we have more stocks above their 20 and their 50 than we'd have Silver Crosses. So that tells me that the Silver Cross is going to start improving even more. And when you have a higher percentage of participation than that Silver Cross, that tells you that you have a short-term bullish bias. So when we look at the bias across the board, short-term bias is looking somewhat bullish. The intermediate term bias is mostly neutral, and the long-term bias is neutral to bearish because of these percentages not being much higher than that Golden Cross Index. Well, okay, I think we covered that, but I'm really, I like to be able to take advantage of really discussing the intricacies of bias and how we measure that at Decision Point. So again, this chart, I go over this every market day, and I give you what the current bias is in the short, intermediate, and long term in our DP Alert report that you can get on our website at decisionpoint.com. All right, so I think we've covered the market in general pretty well here. Let's go ahead and start looking at Bitcoin, the dollar, gold, etc. So when I looked at Bitcoin this morning, what I did tell the folks that were in the trading room is that we do have sort of this nice bottoming formation. We got the breakout above these key moving averages, but we're seeing a bit of a pullback there, almost like a little bit of a cup and handle sort of shape that we're seeing. That is a bullish pattern. So we got the breakout, we got the pullback to the breakout point, which is textbook. That's what a lot of times you would expect, breakout and then a pullback to the breakout point. And it did stay above the 200-day EMA. It closed above the 20, 50, and 200-day EMAs, but now it's just kind of consolidating that breakout move. And I would expect to see more of the same simply because our indicators are kind of mixed. We have a positive RSI. We have a PMO on a buy signal, but the PMO is flattened out. So we don't have any new momentum or even a lot of current momentum to carry price higher. Stochastics are in positive territory, but I have to say this was not present this morning. You can see that stochastics are thinking about turning down, and that would be short-term, somewhat bearish for Bitcoin. So overall, the indicators are still mostly mixed. So I would look at Bitcoin as, again, being mostly neutral, probably going to see a little bit more sideways consolidation. Let's look at the dollar. The dollar has been really traveling mostly sideways in a consolidation zone. No real breakouts, but no real breakdowns. The PMO has turned up, which is good. The RSI is now positive, which is good. And stochastics are beginning to rise, which is also good for the dollar. So this looks like we're going to have another test of this area of overhead resistance. And if the indicators remain positive, I would expect a breakout for the dollar. Let's look at it at the one-year chart, because I want to point out that we do have a rising trend channel on the longer-term one-year chart. So I think that is also positive. The only issue I have, I like rising trend channels, but you touch the top, then you're supposed to go down and touch the bottom. So you may be in a rising trend, but that doesn't mean you're not going to get any downside movement. Right now, it just seems uninterested in touching the bottom of this rising channel, but also somewhat uninterested in touching the top of that channel. But if we get the breakout that these indicators are suggesting we might get that tap on the top of that rising trend channel. Let's look at gold. Gold, very similar look to the dollar. Part of that is currently the correlation between the dollar and gold is pretty much nil. They're traveling as they wish. They're not really coupled right now. And, I think that's part of why we're seeing this sideways action here, basically mimicking what's going on with the dollar somewhat. All right. So, gold is in this consolidation range. I'm really, the thing that I like about gold right now is it's staying above that 50-day EMA. The 20-day EMA, though, it's braiding, is what I call it, around that 20-day EMA. So that's makes things look a little bit more neutral. But in the intermediate to longer term, we do have this very strong support zone, which I expect to continue to hold up. RSI is pretty much neutral. Stochastics are rising and they did get into positive territory, but they sure are moving very slowly. I do like that they are at least pointed upward. You can see that the PMO is still in decline. And really that's because there is no momentum here. So it is just sort of pulling out of that overbought condition. This consolidation is offering it the opportunity to come out of overbought. And it does look like it wants to make that turn. And if the RSI and stochastics are correct, we should get that turn. All right, gold miners. I had a lot of questions about gold miners this morning in the trading room. I do like gold miners still. And at the time, participation was 100% across the board. I'll talk about that in a moment. But we have a symmetrical triangle. These are continuation patterns, meaning they will continue in the trend that was set before they formed, which in this case is a nice rising trend and in fact a flagpole with a pennant on it, and that suggests an upside breakout. We got an upside breakout from this symmetrical triangle. So we got the breakout, and what happened today? We got the pullback to the breakout point. So again, I think this is normal and what we would expect to see. Overall, indicators still look very strong in my opinion. We have an RSI that is continuing to stay in positive territory. The PMO, while on a sell signal, is really just moving sideways. We could see that buy signal trigger at any time. Stochastics are also positive. They've gotten above 80. We like to see stochastics above 80 and oscillating above 80 because that means there's internal price strength. And so I like the look of stochastics. We don't have what I had before, which was 100% across the board on all of these participation indicators, but they still look very, very positive. I mean, when you're looking, like I said earlier, what we look for is bullish as 70% or more. Well, clearly these are all well above 70%. The participation here is very, very healthy. Yes, it is overbought, but as we've seen in March, it can hold those overbought conditions for some time if we're getting a really nice move like we're seeing on gold miners right now. I wasn't surprised to see a bit of a pullback. Again, breakout, typically going to get that pullback. So participation is still very strong beneath the surface, and that looks great. Let's move on to oil. This is forming a symmetrical triangle. And as I said to those in the trading room, take a moment. What does that mean? The continuation of the prior trend, which is up. So we are expecting an upside breakout here for oil. The PMO is mostly neutral, stochastics mostly neutral. We're not seeing any signs based on the indicators that that breakout is ready to occur, but we did see a pretty nice move here today of 3.63% to the upside. So we could be looking at an upward thrust and breakout coming soon for oil. Let's finally look at the 10-year Treasury yield. And really, I think I'm going to pull up the yield array because I think that that gives us an even better look at what's going on with interest rates. So as you can see, we've been on a very steep rising trend as far as interest rates go. The yields continue to move higher. Yes, we saw a pullback last week on these rates, but you'll notice that really the rising trend hasn't been completely compromised here. It's only been softened somewhat. And we can see tons of inversions going on here. I don't really have an opinion as to what that means, but certainly there are some problems when we start to see those inversions of those yields. When you have a 20-year yield producing better results than a 30-year yield, that's a bit of a problem. So that brings me to TLT, which is the 20-year bond ETF. You can see we had a falling wedge, which is a bullish pattern. We got the breakout as expected, and this has brought the PMO to a buy signal and stochastics up to nearly above 80. The issue is that as we got this breakout, it hit the 20-day EMA and is now starting to pull back. You saw that yield chart. We have plenty of we are seeing those yields continuing to rise. That is going to put pressure on bonds across the board. So I'm not expecting to see much in the way of growth on TLT or really any of the bond funds right now, despite this PMO buy signal. Notice the RSI is staying negative. So I think that also gives us that hint that we're in a bear market configuration as far as bonds go. So we shouldn't expect much to come from these bullish chart patterns, and I'm not. All right, we're just about through here. I'm going to show you my diamond of the week, and I'm just going to pull it up. I'm sorry, I did not mark a chart for you today, but I think we can move on this, and I'm going to also set up my 5-minute candlestick. I'll talk about that just shortly. All right, I have 1 minute. I love this chart. I was looking at this. We do have that PMO turning over right now, but it is getting ready to pop to the upside. You can see it trying to rise above that. Stochastics are staying mostly above 80 on this rally. We had that big move breakout. We're getting the pullback, and now we're starting to see AV back above this area of overhead resistance. Stochastics are rising, and you can see that when we're looking as far as what's going on with the relative strength, we're seeing a rising trend here of AVAV against the S&P, which is the most important. All right, so I'm going to bring it up really quickly, my 5-minute chart. This is how I time my entries and exits. Unfortunately, no good entries. I'm looking for a PMO crossover with a positive RSI. I don't see it right now. We can watch, and maybe tomorrow morning we're going to see that. That's all I have for you today. Want to wish you good luck and good trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.